everything that you've done, your blessings, your guidance and your protection. We ask you now to be in the middle of this meeting, to be in our minds and our thinking, and our mouths and our speaking, for us to be able to understand with clarity our purpose, not only in this earth and our business, but in understanding the purpose of money and how to develop money. So we ask you, dear Father, again, we thank you for everything that you've done. We thank you for your presence in this meeting, and we give you all the glory and we give you all the honor from the top of our head to the bottom of our feet. And we say amen to that because we know that there is purpose, there is peace, and there is order in you. Absolutely. Amen. All right. So with that, we will call to order. All right. We will call the roll call. All right. All members that are present, please say aye.
Nicole Allen.
Aye.
Nicole Allen.
Okay, I heard Doretha Dennis.
Nicole Allen.
Ann McNeil.
All right. And Sharon Jackson. Do we have a quorum?
Yes, we do.
Okay, awesome. Thank you so much for that. Now, the next item on the agenda, I'm having a hard time seeing. This is not in focus. Okay, the next item on the agenda are asking for the roll call of the guest. Can we, people that are here that are guests, could you please give us your name?
Zelda.
Good
Jackie
evening.
Pierce,
My
Northeast
name
Florida.
is Jacinta Mathis.
My name is Zelda Okia.
This is Mia Ferguson.
Elena Elkin.
Hi.
Okay, I'm sorry. The last a very weak connection. Okay, it's very difficult to hear, Nicole. I'm seeing all of these young ladies in the chat. Are you able to see that on the chat and take attendance?
I actually don't see anything in the chat.
Okay. So I see Deborah Spencer. I see Elena Herschel. I see Jacinta Mathis, Marcia Jarrett Booker, Mia.
Are you meaning the participant list?
Yes, the participant.
Okay, yes. Sorry. I do see the participant list and I can engage with them through the chat.
Okay, awesome. Thank you so much. And I appreciate you understanding exactly what I meant.
No
All right.
problem.
So thank you. I know that all we did was ask you to give your names, guests, and we're going to appreciate that you did that. And we're going to thank you so much for your participation. Well, before we move on to the agenda, one of the things that I would like to say now is that at the end of the meeting, we're going to have a question and answer period. So please hang on, and questions that you may have about becoming a member, things that we have talked about during the meeting, you may ask those questions then, and we will take the time to answer them. Okay? All right, I'm going to say thank you. All right, the next item on the agenda is the approval of the minutes. We had received the minutes through email, I believe on Monday. If everyone has had time to read them, I'll take a motion to accept the minutes, or accept them and entertain a motion to accept the minutes, or accept them with any changes.
Sharon.
I'd like to make them. Oh, sorry.
I think we need to go back and approve the agenda, approval of the agenda.
Right.
Okay, all right. All right, so everyone has had time to review the agenda. Are there any changes or can we approve the agenda as is?
I'd
Okay,
like to make a motion that we approve the agenda as presented.
okay, do I hear a second?
Aretha, I second it.
Okay, is there any discussion? Okay, awesome, thank you so much. Then all approval, say aye.
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 Thank you so much. Is there any dissenting? I think that was unanimous. Thank you so much. I'm still having a hard time reading what's being shared.
Okay,
the
can the
next-
rest of the members, can you see the agenda?
Yes, I
Okay.
can see it. Okay,
Okay, great.
so the next item on the agenda is the secretary's report. That information has been shared with our membership. And if there are no discussions, we can make a motion to approve the secretary's report. Would
Good.
someone like to make a motion?
Yeah, I make a motion that, well, first, a change is the secretary's minutes versus the secretary's report. So if we could change that to secretary's minutes. But I make a motion that we accept the minutes from the secretary as submitted.
Okay, so you are making a motion regarding the agenda reflecting secretary's minute instead of secretary's report, correct?
Correct.
Okay.
And I'm going to apologize.
Mhm.
As we, I think, all know or notice that Carolyn Modeste is not here. She had a
Yeah, now.
She's here.
this is awesome. Thank you so much. Okay, very good. So we did have a change in the agenda, right? And
Ah.
so,
Yes, that change has been noted and it will be reflected on the next general meeting to reflect secretary's minutes.
okay, thank you so much.
And we also had a motion on the table to approve the secretary's minutes for this past meeting. But we did not get that second.
Ann McNeil made the motion, if somebody can second the motion.
Carolyn Modeste, second.
Okay, is there any discussion on that? Otherwise, we will carry it to a vote. All persons that say are in favor, say aye.
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 Okay, are there any nays? Okay, moves forward unanimously. Okay, now Carolyn, are you prepared to give the treasurer's report?
Yes, I do.
Okay, thank you so much.
You're welcome. Well, you want me to share it?
Okay, let me stop sharing. Go
Okay,
right ahead.
thank you so much.
You're welcome.
Okay. And this is the treasurer's report as of May 20.
Carolyn,
I'm on
Are you-
mute?
are you showing us something? We see
Yes.
not yet. We don't see the report yet.
Okay, let me
It
make
didn't
sure.
open.
Okay, let me stop sharing. Okay,
Mhm.
1 moment. Let me stop and then open it back up, open it up.
Mhm.
Yeah. Are you seeing it now?
Yes.
Yes, we do.
Okay, great. Thank you so much. Okay. And this is the treasurer's report as of May 31st, 2025. Total amount collected for membership dues, $550. The assessment collected for $77.49. we had expenses that I did not put the total amount, but we had expenses that went out. We had a payout, and we have the fee, any fee associated with that. Right. And then we had advance payment of, it looks like 300, and I did not put the total amount. However, we can see if my stuff is moving. I'm just stuck right here. Sorry, it's not okay. So the total cash in bank for TD Bank at the end of May is $655.61. And then we go up here, the total cash available will be 1,000, and that includes the portfolio account and TD Bank. So it's $1,203.01. We have an accounts payable of the CPA of $900. We have a receivable of $460, and our portfolio as of May 31st, 2025 was $17,578.24. Any questions?
No, very good. All right. Do we have any questions?
I will stop share. Thank you. And that's the end of my the treasurer's report. If there's no other questions, thank you very much.
Okay, very good. So I didn't hear, I'll take a motion for hearing accepting the treasurer's report.
I'd like to make a motion that we accept the treasurer's report as presented.
Okay, thank you. Is there a second?
Amy, second.
Okay, thank you so much. And so no discussion. We will take a vote. All in favor, say aye.
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 Okay, awesome. Thank you so much. Next thing on the agenda is the portfolio manager's report. And I've been feverishly trying to find my report. I did a PowerPoint. And so I am having issues trying to find my report. So this means that I'm going to have to go into my club. Just give me a moment. I apologize for this. Okay. I'm
Do
getting
you
ready.
need to share?
I'm getting ready to share now.
Okay, there you go.
Okay, thank you. Tell me when you can see. Okay, you should be able to see now, right?
Yes, we see your
Yes.
heat map.
Okay, thank you so much. Okay, so I'd like to start with the heat map because it always shows in a glance exactly how our portfolio is doing. Obviously, the dark green means that those are our stocks that made money. As you get into the lighter pinks and the reds, it shows that those are the ones that are losing money. And like CVS is a gain, but it's that green and pink. And so right now it's still small, but there is a gain. But it gives you the idea of where we are. Now, the thing about this that's really important is that, let me go to the next. Just give me a moment because I'm going to have to do this because I can't find my PowerPoint. But what I wanted to show you is that even though we have a number of a number of companies that have lost. We still, our goal is a 9%, right? Is it double digits? Well, we still made 9%. We did a 9% increase for last month. And you can see in the red the ones that were losers. My beloved Disney, which we've lost money on Disney for like over 6 months. Their stock prices have increased, but it's still important to do a deep dive to see whether it is worth saving. Jinko Solar, again, we have Jinko has been an issue for probably 6 months. We need to look at that. Nice, I know a lot of clubs have sold Nice. Nice is going back up. The question is, do we sell it now and buy it when it comes back up, or do we watch it? So I guess we will get that on the Stock Watchers report. So you can see all of these. But the biggest thing I wanted to show you, let you know, is even though we had losers in the market, we had such big gains in the market that we still made a 9% increase. The other thing I wanted to show you is we still have an issue regarding diversity, company size. We know that. Are you seeing this? Diversity, company size?
Yes.
Okay.
Yes, we're seeing it.
Okay. We know that BIA's guidance is that mid-cap, small is supposed to be 20%. We're now at 8%. Mid is supposed to be 50%. We are at 30, being generous. We are at 34, maybe 35%. And large is only supposed to be 25%. And this is like 53%. So we have been in this situation for a while because we started selling off our losers last year and we didn't replace them. And that is one of the reasons, the main reason why we're in this situation right now. So I wanted to show you this. I mean, it hasn't changed for the last probably 6 months, but it's important that I continue to bring this in front of you. In terms of sectors, let me show you this. I think we are well diversified. Hold on. We are diversified. There are, I think you can see these, there are sectors that are not represented, but we do have a large number of companies in the various sectors. We are not represented in basic materials, in consumer defense, and utilities. In listening to different investment clubs, some investment clubs say we have to be in all sectors. Others say you don't have to be in all sectors. You just have to make sure that you are in each one of the size categories and that you continually purchase stocks that are earners. All right. That, unless you have questions, that completes my portfolio report.
I actually thought we did have some utilities. Was Jinko not considered a utility company?
Hold on. I'd have to look that up
Consumers.
because it says it's not, we don't have utilities.
Okay. Right.
I don't know if you can see that.
Yes, I do see that. I just wasn't sure where, how it was categorized, but I can pull that up on Better Investing to see how they've categorized it.
Okay, very good.
Yeah.
Okay, are there any questions regarding the portfolio manager's report? If no questions, I can entertain a motion to accept.
I'd like to make a motion to accept the portfolio manager's report as presented.
Okay, thank you. Is there a second?
Aretha, I second.
Okay, thank you. Will, all in favor say aye?
Aye.
Okay,
Aye.
thank you. Are there dissenters? Okay, then we have accepted it unanimously. The next thing on the agenda are the stock watches report.
Awesome. I believe I'm up first. So let me quickly share my screen. Who's sharing? Can you please give me?
Stopping right now.
Okay. Let me start with Air Lease. As you can see on the screen, we do an SSG. This is the front page of the SSG, which shows us, it should show a graph of up, straight, and parallel for our sales and our pre-tax profit. As you can see, a dip starting 2019 on down into COVID, 2020, 2021, 22, and it starts to rise in 2023. But again, it drops, it started to drop in 2024. So now we're looking at a forecast from my perspective. And I chose the numbers of a 9. This is my forecast for the next 5 years. I chose a 9 in the sales, a 9% in the sales, and for earnings per share, I said I used an 8. And I looked at the sentiments of the members of BI, and also I looked at the analyst, I looked at Value Line. These are resources we use to help us make a decision with our stocks. Also, you can see a rate of return of a 5.1%. They are very deep in debt. That debt to capital ratio is a 72.6%. Most of our stocks we look at no more than a 50%. So this particular company, deep in debt, but let me show you what kind of company it is. They leased aircrafts to different companies. And so that might would have an effect on why their debt is so high. They also buy and sell aircrafts. They are stationed around the world, Asia, Pacific, Europe, Central America, you name it, they are there. Let's take a quick look at how they're doing financially according to the numbers that I use. They are in a sale position, a sale range. They have an upside downside ratio of 0.3 to 1, a potential price appreciation of 15%. And as we look at this last box, annual rate return of their high PE says about a 4.5%. Most large companies, this is a medium company, we look for them to have a 7 to 12%. So they're not up to speed yet. They're only at 4.5%. And their annual rate of return using an average PE is only a 0.8%. But we have 25 shares with this company, and they have made money for us. So I am going to recommend that we continue to hold this particular stock and not sell at this time. For the next stock, which is Amazon, they are a large company. Morningstar gives them an A, and all of you know about Amazon and all different things that they do. You know, they say online retailers. They have several other different companies, Prime, and so they are really making lots of money from their customers. They're historical. Let me just take a look at the graph for them. They started out doing very well. 2021, I guess COVID hit, 2021 started to drop and started to pick up 2023, and they have been doing very well ever since. I gave them an 8% for a forecast for their sales for the next 5 years, and I gave them a 13% historical earnings per share. Their debt to ratio is debt to capital ratio is 42%. That's still pretty good for their company. Their return on equity is an 18%. Let's take a quick look at the valuation and return. They are in a buy zone according to the numbers that I gave. Upside downside ratio of 6.4 to 1. That usually starts at a 3.0 to 1, and so they're doing okay. Let's take a look at this last box with the high PE ratio and annual return of 18%, really good. And for an average PE 14, using an average PE 14.8%. We have 10 shares of Amazon. They too have made lots of money for us, 78.9% gain over the time period we bought them in 2022. For this company too, Amazon, we're going to hold on to them. They are making money for us, so we're going to hold on to them. This last one I have is Cactus. This company is a medium-sized company. Morningstar gives them a B. They work in the oil and gas industry with those well heads and the pressure control equipment. That's how they make their money. You can see in 2019 and into the COVID era, they did drop a little bit, but they too have bounced back and continue to grow in their sales and their pre-tax profit. For the forecast and sales, I gave them a 12%. Earnings per share, I gave them a 13%. As you can see, they're doing very well in their debt to capital ratio. They only have 5.6%, an annual rate of return of 16%. Let's take a quick look at their financials over here. They too are in the buy range. This last box shows us a forecast high PE of 23.7% and a forecast average PE of 20. Their annual rate of return is 20.2%. Now, let's get to what we have with them. They have lost a 21.2%. We have 20 shares of Cactus, but because they are doing so well, oil and gas has started to rise again. I'm with them too. I'm going to say that we also hold this particular company, and they are a medium-sized company. I'm going to say that we hold unless the members of the investment club has a different perspective. And that is my report.
Very good. Very good, Doritha. Next up.
Thank you. Anne, are you reporting for?
Yes, she stopped sharing.
Okay. Would you like for me to pull up, or are you going to able to pull yours up?
I sent it out to everybody, so
Go ahead.
if you want, let's see here. Oh, Doretha, if you're saying something, one of us on mute. Not sure if it's me.
No, I can hear you. Can you hear me?
I hear you now.
Mm-hmm. Would you like for me to share, or you just want to give an overview? That's fine, whichever way you wanted to present it.
Yeah, I'll go ahead and share.
Mm-hmm.
Okay, give me 1 second. start with. Can you see? Can you see what I'm sharing now?
Yes.
Okay. All right. All right, so I sent the study for the SSG, excuse me. Okay. All right, I might have to have you share what I've already sent Doretha, and I can just go through these. Let's have that.
Okay, I can share. You have it?
Yeah, I got
There
it.
you go.
All right, so let's go to, okay, see, let me start with, all right, I'm gonna start with CBRE. All right, so CBRE, I used a 6.8 historical sales for this. And as we can see in the beginning, the stock was doing well, excuse me, was doing well in terms of sales. But again, right at about, and I think this is going to be the same for many of our stocks. Let me just go with CBRE, just talk about it a little bit, the company. For me in construction, it was ideal because it is, a CBRE is a group that provides a wide range of real estate services to owners, occupants, and investors worldwide, including leasing, property and project management, and capital markets. And I'm finding they're also going into the construction industry here recently. They've made an investment in management on a management arm and manages over $140 billion for clients across diverse public and private real estate strategies. Now, for the forecast, like I said, I did an average going to the sentiments and also some of the other historical data. A 6.8 historical sales forecast. EPS, I used 16.4. And as we can see, their debt to capital here is about 35%, which is under. And percentage return on equity is about 14%. Okay, go to now. This is expected for high price in the next 5 years to be at about 173. The selected forecasted is expected to be at about 47.4, excuse me, yes, 47.4. The SSG is showing this as a hold. And when we looked at, sorry, go back. When we looked at the upside down ratio, we can see where our current price is, and then also where the forecast is, which is, I think that's good. It's a 0.06 to 1 in terms of what the upside down ratio is showing. Right now, I would also suggest that we hold this. We are currently holding it now I don't think that we should take any other action on this except to hold it. I'm not sure if there are any questions for me, and I'll otherwise go to the next stock.
Very good.
Next stock, go back here.
With CBRE, Anna, be interested to see what some of the competitors are doing in this space.
Okay, so to compare peers.
Okay, so we have Jones, Lang, LaSalle, and what is that? Berkshire? Is that also on there as one of their peer competitors? Oh, Key Holdings. Oh, okay, all right. Yeah,
Sorry.
okay.
Yeah, Key Holdings industry average. As we
Yeah,
can see.
so right around that 21, 22 mark, you're seeing those same in terms of growth. You're seeing some of those same trends. Okay.
Right, and as you're saying, and you can see it's holding its own in 2024, whereas in 23, Jones, you know, was reporting a little better in the historical high PE. But yeah, so I think that it's it's a whole, we should continue to hold it and continue to watch it.
Okay, thank you.
Thank you. Okay, CVS was the other stock that I had, and we can see here. And again, I took out some of the outliers in some of these years, but I used a 4.0 historical sales forecast for this stock, and then for the historical PE, I use a 12.4. Now, in terms of the company, I think most of us may know a little bit about CVS, but just here, Morningstar gives it a financial health grade of a C. It's considered to be a large company at about 10 billion in sales. We know it's in the healthcare sector. Sorry. It is has its roots in retail pharmacy, and I think for many years, the competitor, I can't even think of the name of it now.
Walgreens.
Thank you. Walgreens.
Rite Aid.
Mhm.
Yes. What part of the world you live in? Absolutely.
Mhm.
They acquired, let me just read it the way it's, okay. So it's roots in retail pharmacy operations, whereas operates over 9,000 stores primary in the U.S. CVS is also a large pharmacy benefit manager acquired through Caremark, processing about 2 billion adjusted claims annually. Also operates top-tier health insurer acquired through Aetna, where it serves about 27 million medical members. Okay, all right, so let me go to debt to capital. You can see it's high, a little high, actually. The percent return on equity is about 8%, and pre-tax profit on sales is operating at about 2.7%. All right, now here, our high price for the next 5 years is looking about $127. Selected forecasted low price is about 46, and we see that it is showing as a buy. Upside downside ratio is about 3-to-1. Look at that visually here. It's about 3-to-1, and it's showing as a buy. Even though it's showing as a buy, I'm not making any kind of recommendation. Actually, we can discuss that. Okay. That's about it. So we can get to the balance of the presentation. I'll do my last one. Any questions for me though before I go to the last one? Nope. Okay. Thank you. All right. And this is Sharon's All right, this is Disney. The current price is about $112. It is entertainment. It's a large company at about 10 billion in sales. Financial health strength is a grade B. Disney operates in three global business segments: entertainment, sports, and experiences. Entertainment and experiences both benefit from the firm's ownership of iconic franchises and characters. Entertainment includes the ABC broadcast network, several cable television networks, and the Disney and Hulu streaming services. Within the segment, Disney also engages in movie and television production, distribution with content licensed to movie theaters under content providers. Oh, sorry about that. I'm going to stop there with that. And I'm going to go to value line. I just want to read this, the value line has to say. Okay, the media giant ought to make progress in the near term. Management is cost-cutting measures, including plans to slash its workforce by 6%, and the reduction of its capital program should help counter rising operating expenses. Even so, the House of Mouse has been investing in quality content and strengthening other parts of its business, including the experience division, which should bolster totals. The bottom line was held back by a large goodwill impairment charge in the fiscal second quarter of 2024. As such, we look for earnings to advance 75 to 80% this year, while revenues climb 3 to 5%. Looking out to fiscal 2026, the top and bottom lines should continue upward at a low single-digit clip. This issue has been under pressure of late. In early April, the stock price declined sharply amidst a broader market downturn, combined with a somewhat contentious annual general meeting, where several shareholder proposals were rejected as per management's recommendations. Disney has had a challenging run over the past few years. Nelson Peltz attempted a proxy battle in 2024, and even though the company retained control of the boardroom, there has been a lot of speculation as to whether the media giant's effort will be enough to turn things around. Still, the recent pullback may provide a worthwhile entry point for patient investors, as these shares offer wide capital appreciation over the 18-month and 3 to 5 year spans. Separately, the board reinstated the dividend program last year following the suspension in 2020. Now, I'm not going to go there, but I just wanted to just read that because I thought it was interesting. I don't have these. I thought it was interesting when Sharon talked about how, let me make sure. Okay, Disney, here we go. How Sharon talked about her concern over Disney, which is a buy. And we can talk about it later, but if I were to probably make any recommendations, I would probably recommend we look at, maybe not right now, but eventually look at buying additional shares of Disney. That's it for me. Any questions before we go to the next report?
So is your recommendation to hold or to purchase?
I'm going to suggest we hold it and really look at our financial situation, because you have to make some investments in some other areas. But I think that considering buying the stock would be something we should look at, because it is, the price is down.
Mm-hmm.
I have a question. What was the size again?
The size of this company?
Yeah,
Yeah, it is
yeah,
considered
large.
Yes.
Large.
That is my concern.
Yeah,
And that's why Sharon, I said because again, we have to rebalance some things, but when we start really looking at analyzing the portfolio, this may be and we can I think it's called I forget the better investing word, where you challenge a stock with a stock you already have and you see which one come out the best.
Mhm.
So oftentimes we look at stocks that we don't have to buy and we compare whether or not we should buy a new company versus looking at companies that we do have, say large ones, and maybe sell off some of the large ones that's not doing well and that are high, and maybe buy a few more shares of the ones that are underpriced. So those are just some thoughts. So that's why when she asked the question, I'm just saying hold.
Okay.
All right, thank you. That's it for me. Thank you. I'll stop sharing.
okay. Who's next?
So it would be Carolyn. Now Carolyn, we kind of gave a pass because she was going to present our SSG. So unless she wants to. Okay, why don't we just go
Pass.
on?
She said,
Okay,
she
so
said
she's
pass.
got a pass, okay. And which stocks were you reviewing, Carolyn? I don't have the agenda up anymore.
It's Jinko Solar, Lennar Corporation, Nice. Those were her three.
Really? I thought those were my
No,
three.
no.
Am I looking at the
Uh,
wrong agenda?
You're Gildan Activity Wear, Facebook, and Electronic Art.
Oh, okay. All right,
Okay.
Mhm.
all right,
Get you.
all right. Okay, so I can go next if you ladies are ready. So I have Nice, Lennar, and Jinko Solar. Are you able to see my screen? I'll start out with Nice or Nice. Let me know if you're not able to see. I'm gonna have to move some of this around. So on the face value, this looks amazing, right? We are always saying that we want these sales to be going up continuously, just like, our businesses. We want our pre-tax profit to also be climbing up, as well as our earnings per share. So on the face value, just looking at it, it looks like it's on a really good trajectory. Every year has been pretty consistent. Although it's not been significant growth, it has been growth nonetheless. And so we can look at some of the historical data. You're looking at about $927 million in sales in 2015 to almost $2.7 billion in sales in 2024. So it's got a really nice, steady growth rate. If we were to analyze these years, we'd see an average of 12% growth, which meets our better investing guidelines. Now, the NICE is a software or a software application / technology company. Morningstar gives it a grade B, which I think is very conservative. Even though I know that there's a lot of competitors in the market, and there's been a couple of issues, particularly with the leadership of this company. I still think the grade should be somewhere closer to a B plus or an A. Now, when we analyze it, today's closing price was $176.79. It's a medium company between 1 billion and 10 billion in sales. It's again software application, and I really can't tell you in layman's term what they do, but they do a lot of financial security, cloud type of financial, what do you call it, digging down and evaluating and securing our financial data. So they're pretty big in that space. So it says right here, within financial crime and compliance, they offer risk and investigation management. So if your credit cards get stolen, or, you know, God forbid, we have, you know, a data breach where your personal information is stolen, more than likely there's some type of technological application that is powered by this type of company to secure your data. So with that being said, the analysts for the next 2 years suggested that the sales rate, the forecasted sales, is going to be about 7.3%. I went a little bit more conservative, so I said, okay, 7%. And that's with looking at Morningstar and Yahoo Finance and sort of just taking in as much information as I can. In terms of the historical sales, again, we can see that's been going really, really nicely over the last couple of years. It's about 12% so far. I'm a little bit more ambitious on that. So I think it will get closer to that 15%. So I estimated somewhere around 14.6% for that. And we want to consistently see positive earnings per share. And even during COVID, like, we didn't really see a big dip between 21 and 22, 2021, 22. You can still see there was a little flat line between 2021, but no decrease. So that tells me that this company is probably doing something really good to sort of either reduce their debt so that they're not losing money during this time. And again, it was a great time for technology companies to thrive. All right, as we look at the valuation, so one of the things that we really try and evaluate is the PE ratio, and that's very basic. It's the price versus the earnings. And so you typically want to get a really good PE ratio because you want the price of that particular stock to equal a value that's greater than the earnings, which means that more people will buy it. So in this example, I estimated, or the analysts, the last 5 years, the analysts estimated 73.2%. The average is about 56, but the current PE is 24.7. Now, I chose the current because I didn't really like a lot of the information that I could find on the leadership, which really is a driving force in these technology companies. There's so much turnover. It was a little shaky. So I went ahead and used the current PE ratio, which is still really good, which puts over the next 5 years a high price of $350. Again, right now it's trading at 176. So it's not too far-fetched to think you're going to be in that range. As it relates to the low PE, as it relates to the lowest price, I said, okay, well, let's just go with the recent market low of $137. And I kind of just stayed in that range, which puts us in a buy range. Buy range is anywhere between $137, which is the recent market low, all the way up to $190. Anything over $190, I think we want to start holding on because we're still waiting for it to reach that $350 range. So I would recommend, my suggestion, if looking at our finances, is that this is a good time to buy this company. Some of the other factors to consider, we talked a little bit about, other people talked a little bit about that upside downside ratio. Okay, that upside downside ratio is really evaluating this stock against the market or its peers. So it's benchmarking it against other companies that are in this same industry. And so it basically says there's a gain here. Anytime the upside is higher than the downside, there's a gain. And it's outgaining its peers 4.1 to 1. Okay, so for whatever 100 shares you buy of the benchmark industry, you're going to be gaining 4.1% in value over this year. So I kind of like it. It's still kind of low. I was looking for something a little bit more high, but it's good. So that is nice. Any questions?
The only thing that I wanted to kind of add, it's not really a question, it's just when I first looked at Nice, it was the articles indicated that the management and the people that work there all came out of Israel and worked from Mossad. So you have to realize who those people are that
Right.
developed this company. That's all I wanted to say.
That is a really, really good point. I mean, so now we're looking at the political environment surrounding those, the Israel-United States relationships. And so it's good on value, but if the majority of that workforce are they stationed? If I know the home base is in Israel, so if the workforce is there, that would be something to consider.
It's not. That was the other thing that
Oh, okay.
was it was a stock to study by Value Line. And one of the
Okay.
comments that they said is that yes, they may be stationed in Israel, but they are located all over Europe. So if anything happened in Israel, you would not stop that corporation because they are strategically located around.
Okay, well then that adds some security. So,
Okay.
thanks for that, Sharon. I appreciate it. So, and then just jump in, guys, if there's some things that I'm saying that's not making sense, or you have any questions. So, Lennar, I don't know if you guys know Lennar, but Lennar is a residential construction company. They build single-family homes. They are in the senior living space. They build townhomes. They're really big here in the Mid-Atlantic area where I'm located. They're sort of a tier above the Rylands and the Tri Points, but they're not top luxury, so they're in that affordable range. Most of their homes in this area range anywhere from like 450 to maybe 800. And they're pretty good homes. I mean, the quality is good, and they've been advancing, like I say, throughout this Mid-Atlantic region. Some of their top competitors, I'm gonna see if they would say D.R. Horton, which is a really strong company, great company. Toll Brothers, Toll Brothers in this Mid-Atlantic region would be considered a tier 2 company. So they're just below Lennar. They're not as luxury. So if you go from like tier 1, which would be like your luxury all in, and then tier 2s would be your modest income, and then tier 3 would be your starter home. So Pulet, I've seen very few Pulet homes here. They're usually custom, but those are some of the competitors. Right now, Lennar is trading at $110 a share. Morningstar gives it a B grade. It is considered a large company, over 10 billion in sales, and it's one of the largest public home builders in the United States. So, as it relates to its historical sales, you can see they've been growing pretty nicely over these last couple of years. It's never been a decrease or a decline. It's been a little bit of a slowdown, again, between 2019 and 2021, but never a dip. So the analysts estimated, which I couldn't understand. Now, this is baffling. They estimated over the next 2 years only a 1.1% growth in its sales. So just curious to see what that actually looks like. I would have estimated a little bit more because remember, we're in a housing shortage and there's always a need for more affordable housing. And like I say, they do fit that mid-range. The earnings per share have gotten really good as well. There's been a little bit of wonkiness between 21 and 23. possibly because of reallocation of funds to maybe take care of some of this debt, which we see has completely almost decreased. So that's a really good one. And then the analysts also estimated 7.5%, but I wanted to go with the average of these years, just removing I think I was removing the 2020 and then I can't remember 2023 or something. So I came up with like 5.9%, just being a little bit more conservative with Lennar. As we look at the valuation, we can see that the 52-week low is $98. And then right now we're only at 110. So over the next 5 years, I'm estimating using a 7.0 PE ratio. We're estimating that that current price is only going to get as high as 128. Now, this is probably why I got only $128 in 5 years, is because the analyst is only estimating a 1% growth. So I was going to put somewhere close to around 7 and, you know, to see whether or not that was actually going to do anything different, because that didn't make sense to me for it to just be a 1% growth. If I was to change that, then you'll see it became from was it a buy or a hold? Anybody remember what it was at first? When I had the 1.1% in here?
I think it was still a hold.
It was
Hold.
still a hold? Oh, okay.
Mhm.
So I'm gonna be a little bit more aggressive with the
Hey, King,
average
hit
high
mute. I'm sitting at
PE.
a meeting, but you say I put them on mute. Oh, excuse me. Sorry.
Oh, okay. Okay, so I changed the
Call me
PE
back,
to
call me back. I'll
9.2
call you back.
because
Okay,
that
bye-bye.
is the average high one. So now
Bye,
it's still
Nicole.
only getting up to $168 in the next 5 years. I'm gonna keep this low forecasted PE because that's the average low over the last 5 years. And I hope it doesn't go under $62, but right now it's in a holding pattern. It becomes a buy if it does hit below $94. So we're not too far from it at $110 now. I think Lennar is a really good, stable company. I just wanted to see a little bit about, you know, whether or not there's some opportunities for growth there. Its upside down ratio is a 1.4 to 1. So it's pretty much in line with the standard, with it's being benchmarked against the industry. So no real excess in this number. So that would support a hold on this one. And then the last one is Jinko Solar, which was kind of wonky because it has a negative earnings per share, a negative in historical sales.
And do you have your hand up?
Yeah, I
Yes.
have my hand up.
Oh, I'm sorry, I can't see anybody.
Excuse me, I thought maybe I was on mute.
Yeah, go
Yeah,
ahead, Ian.
I just wanted to add something. While you were talking, I just went to Google and asked a question. So I just wanted to just read for you what they said if you want to hear that.
Yes, yes, please. Is it regarding Lennar?
Yeah, Lennar, just when you ask
Okay.
the question, it says, are Wall Street analysts predicting Lennar Corporation? Let me go back to say, it says, which makes sense. It says analysts may issue low price targets or sell recommendations for Lennar stock due to a combination of factors, including economic uncertainty, concerns about the housing market, such as high interest rates, inflation, and declining consumer confidence can lead to lower sales and profits for the homemaker. Backlog declines, they have a decreasing backlog, outstanding orders, also signaling weaker future demand for Lennar homes, impacting their revenue and stock price. And then falling earnings per share, a dip in EPS, even with the revenue growth, may be indicating that Lennar is becoming less profitable as a per share basis, leading to lower stock price. And then it goes on to a couple of other things, but then this article in Yahoo Finance says that the Lennar stock has taken a beating over the past 6 months, shedding 34% of its value and falling to $110 per share. But I just wanted to just share those things that that might be adding to the point you're making about
Yeah.
why gas is so low. Thank you.
Yeah, that's really good. I mean, I see the interest rates are going down. I mean, in my area, I mean, this nationally, right? Right now, I think we're somewhere around 6 point something, and we were a couple of months ago prior to the election, somewhere close to about 8.5. And then in some cases, almost 10%. I do see, I mean, right here in this area, we still have a high demand for residential homes. And so that's something to consider. Yeah. They're certainly not as profitable as they once were. So, okay. Jinko Solar. So Jinko Solar, I'm just trying to figure out how to do this. It's a negative value in solar. Let me tell you a little bit about Jinko Solar. Jinko Solar is, close that out. They are a solar company in the technology sector. They're a large industry, more than 10 billion in sales. And right now, Morningstar gives it a D grade. Now, Jico Solar, I believe, was out in the West Coast, so I haven't really seen a lot of what they do over in this area, but they provide solar power. So they manufacture the modules and they sell them under their brand and I believe other brands as well. And they have they have the standalone solar for like the solar fields. They have the solar cells themselves and other different types of modules. Looks like they're geographical. They're in China, North America, Europe, Asia, and a little bit all over the place. So solar is really crowded right now. And considering the president's interest in green energy efficiency, I don't see many solar companies who are going to be thriving in this market. So that's probably contributing to this potential negative growth in sales over the next 5 years. You can see we started to see a bit of it right at the quarter, I believe somewhere around the second or the third quarter of 2023. Okay, so a negative 2.7% is what the analyst says. In terms of historical earnings per share, it's all over the place. We go from 2.8 in 19 to negative 0.79, back up to 1. So it's a mess. So I basically said 0 because I don't know. I don't know what's going to happen with the earnings per share. This past 2024, it was a negative. And the growth consistently over this time period is averaging negative 35. All right, in terms of its valuation, so I'm looking at the next 5 years. Again, I'm using the standard average PE, which is 25.9, which is really good. It's giving us a high forecasted, well, a negative value in the earnings per share. And it couldn't come up with a number. It's $18.71 now. So all that to say is the analysis is basically suggesting a sale of Jinko Solar. Now, I'm not sure how much we actually own. I have a few in my portfolio, and I think it's average probably about 42% in decline since I purchased it. And so this is pretty consistent to what this analysis is saying. Really couldn't compute an upside downside ratio. I want to go back a little bit more and look at some of the peers and see, yeah, there's really no peers in this space. I want to say what's the other solar company name? I don't know. Maybe I can do some more research and see if there's any peers I'd like to add.
First Solar?
First Solar, you think
Yeah.
that's one? First. Okay, let's try and let's see what First Solar. Is Blink considered a solar company? Anybody know?
I thought Blink was more electric charging company.
Oh, okay. Let's see. First Solar. Let's see if I can update the study. Add First Solar. Well, First Solar is at least, well, let's see, 2015, no values. Their PE was 1660 to 1. That's pretty good. Yeah, they're a little inconsistent as well, but it's not as consistent because you can see the industry average is still in the same range. Very sporadic in these years. Any other companies that you can think of? What is First Solar's ticker price? 2024? Oh, all right. Let's see their historical sales. All right, a little over 4 million. Is that right? The first quarter of 2025, 4.2 million in sales. Jinko had 12.8 million in sales first quarter of 24, 11 million first quarter 25. So it's growing. Earnings per share, no way. Nobody's getting any earnings per share. Okay, industry debt to capital, pretty much the same, leveling out. All right, any other ones we want to look at? All right, so the recommendation right now is to sell, but I suggest we just hold on for maybe another month or so just to kind of see whether or not, there's going to be any changes in the government's initiative towards green energy and solar and possibly financing more solar projects. So those are my recommendations. A hold for Jinko. I said a buy for Lennar, and I said a hold for Nice. Okay, that's all I had to share. Thanks so much.
Okay, thank you so much. Well, now it is up to me, and I'm going to apologize. I thought we only had 3 minutes, so I didn't do full presentations. I'm going to tell you this. So my stock are these. Charles Schwab, hold on just a second. I will begin to share. Tell me when you can see.
We can see.
it. Yes.
Okay, very good. All right, so my first stock is Schwab, right? Schwab, we all know, is I'm going to share this. So its sector is financial services. It is a large company. Its financial health is C, but I believe that that Value Line has it higher as an A. It does. It has it as an A, but Morningstar has it as C. And you can see that Charles Schwab is one of the largest retail-oriented financial services company in the U.S. All right, and it's a dominant player in the investment field. So when you look at this, well, first of all, you can see right here that is kind of an issue is that it's trading at the high, but as you can see, it's pretty much, up straight and parallel. They had an issue here in 2020 because they had an interface with TD Bank. I believe that they either merged or there was relationship with TD Bank and there was a dip here. But other than that, Charles Schwab has been really a very steady company. In historical sales, you can pretty much see that they had an issue right here in 2023, but other than that, they have been strong in terms of historical sales, and in terms of their debt to capital, they have been going down. And in terms of debt to capital, I looked at their peers and they were lower than a lot of their peers. So in terms of that, Schwab is pretty steady. Now, I chose for historical sales, I used 10% and I used 13%, 10% and 13%. 10% for continual historical sales and 13. And that was also very similar to the sentiments. Now, for valuation, I used the 5-year high for the PE. And then I think I also used the 5-year low for the PE. Yes, well, they said 17.2. I used just regular 17. And right, it comes out as a hold. Okay. When you look at the chart, I've already told you that its current price has it in a hold. All right. I recommended, even before I went through this, I recommended, because it is doing well, it has done very well for us, but it is also a large company, and naturally, maybe we go through the process that Ann suggested, but it is done very well for us. It is a large company. I would hold. I would not recommend buying more right now. The next company that I am to do is Square. Which I believe is called Block now. Now, Block has had its issues. And you can see here that it has had its issues. Everything that I did basically indicated that Block is it has a lot to overcome. All right. I went to the sentiments and I went ahead and used 8 in historical sales, because they have been climbing. I mean, they had a small glitch here, but in 2023, 2024, they have been increasing. All right. So I looked at the sentiments and I looked, and they used 8. I also used 8 in terms of historical sales. Again, they had a major dip, and they have, and it went down actually for 2 years, and then it started coming up. So I only used a 10% for historical EPA. I also use the average PE for the average high, and I also use the average for the low. It is in the buy range, but again, I think that given the fact that it is large, given that right now it is tentative in terms of their health, because Morningstar gives it a C, um, I would recommend that we hold and do a very deep dive in an SSG to make a determination if we sell Block. That's one of the ones. If we're going to sell something, I would consider selling Block. My next company is it is Western Alliance. Western Alliance is a medium. It's got a financial health of a C, and it is a holding company with regional banks, and it basically operates in Nevada. It's out west, Nevada, Arizona, and California. I know a lot of um, groups have purchased Western, and if you look at this, it does say up straight. They have a little bit of jigs and jags, but in general, they have been trending up. The thing about uh, Western Alliance, they are their closing price is 72.03. I went to Morningstar. Their fair value, according to Morningstar, is only 65.78. They said that they are trading at 10% over their fair value, that uh, their lack of financial, their lack of stability basically weakens their resilience. And they're saying that if there is a downturn, they probably will be very difficult. They'll have a very, well, they're just saying that they won't be able to make it through a downturn. But the biggest thing is that they are trending 10% above what their fair value is. All right, so let me continue to go through. All right. I used again the sentiments, which was I used the 5-year average for the high, okay, of 13. And I believe I used the average for the 5-year low, and they have it as a hold. Now, I have been looking at a side eye with Western Alliance for a couple of months. My recommendation, in all honesty, is that we do an SSG. I guess we, meaning me, do a deep dive in an SSG, and that is to sell. I It is to sell. That's my recommendation. My last is Zoom. Zoom is medium, and it's technology. It is sector is technology, and I think we all know Zoom because aren't we on Zoom right now? So, and the thing about Zoom is that once Zoom rose to great popularity through the COVID, the thing about Zoom is that they realized after they came out of after the COVID that uh, there everyone was after them. And so what they've begun to do is start looking at other avenues, and that's what they're producing right now. So let me just go through this really quickly. So if you look at Zoom, they have been pretty consistent in terms of their historical sales. It slowed down a little. After COVID, it slowed down a little, but it still has been maintained. Still use 21% for continued historical sales. And then for historical EPS, I went ahead and used 22, and I'm pretty sure that that's about what the sentiments say. Now they had a glitch. You can see that right here. There's been an issue, but they have started coming out of that very strong. Now, their debt to capital has been extremely low, extremely low. Now, let me go to this. Now, I used the cinnamons, and I guess I would use the sentiments because I just couldn't go with the average, the 5-year average. I went with what the sentiments and all their arguments. And then I did the same with the sentiments in terms of the low PE. It comes into a buy range, and it's a strong buy. Um,
This seems to suggest that we're going to be hitting another bubble Zoom with this high market price of $594. I mean, I feel like there's so many other competitors on the market right now. And I know Zoom has been pushing over the last couple of years AI integration and trying to
right.
do a lot of to catch some of those other standalone applications as it relates to meetings and recordings and things like that. And I know that they've gotten really heavy into integrations as well.
Right.
But I mean, to see a growth over the next 5 years that's projected to be in the 3 digits is, I don't know.
I'm not saying that we have to keep it for 5 years, and I
Mhm.
agree with some of what you're saying. It's
Mhm.
just that I think what they're doing, because they know that they are not the only boy in the market anymore.
Right,
Okay.
right. Yeah.
And what they have begun to do, like I said, they have put time and effort in building new products and processes.
Yeah.
And so while we may keep it for 5 years, but right now it's in a good buy range. And it one of the things that I've found also is that in other groups that they have used some of the other products. They weren't as easy and manageable, and they went right back to Zoom.
Mm.
And so I know that everyone is marketing, realizes that,
Mhm.
but I'm saying that I think that because it is a good company, because even Value Line says it's a good company, and I had good things in Value Line and Morningstar, both were very high on
Mhm.
Zoom. I didn't do an in-depth I didn't do an in-depth SSG. Okay, I already know that,
Who did
but I do
they
think that one needs to be done
yeah.
to see if we buy, because right now it is in the buy zone, and it's a
Who are the peers? I mean, I gotta say they won a lot of the market during COVID because it became a whole verb, right? Let's Zoom, right? So you
see.
found a lot of loyalty in that. So I'm just curious to see Autodesk. I'm not familiar with that.
Mm-mm. And
Zoom
apparently,
info.
Nicole, they must have had a lot of different products already in the making because they were able to quickly
Yeah.
introduce all of those products. When you look at the things that they put out now, the whiteboard and all of that,
Mhm.
they must have been already, working on those products. Yeah.
Yeah. I'm not
Yeah.
sure these are true competitors. I always thought Zoom Info was more of a business verification directory similar to Dun and Bradstreet. I'm not sure that they provide like communication related video, audio similar to Zoom. And then Autodesk, I remember vaguely about Autodesk, but I don't know if those are the real. I would think, um, um, well, Google. I would definitely think Google might be a good competitor with their diversified products. I would think, Microsoft also would be another competitor with their products, but I don't know about these other competitors. I'd have to.
I'm not either.
Yeah, Full Truck Alliance, I'd have to look at those, but that's
Mhm.
interesting.
Yeah,
Yeah.
but that's what they had.
Yeah, that's interesting.
Yeah.
Didn't tinker with it.
Yeah, yeah. Mia has her hand up.
Yes,
Yes, Mia?
Yes, ma'am.
yes, Nicole, I was just gonna say, Autodesk is actually just coming through because it was a part of AutoCAD. So AutoCAD, Autodesk, all of that is all it's all consuming now. So a lot of construction industry and engineers and architectural firms and firms that collaborate with one another, they use Autodesk. So they're putting it in as an additional platform. So that's how it's becoming a competitor for Zoom because it is communication related. So just wanted to kind of give you that because I do use it with several of my vendors.
Oh, wow.
Very
Okay.
Mhm.
good.
All right. Well, good.
Mhm.
Let me see. Thank you, Mia. I appreciate that.
No problem.
Yeah. So we'll have to look at that one. It's been pretty solid in terms of
Mhm.
sales,
Yeah.
you know,
Mm-hmm.
10% growth. So, all right. Great job, Sharon.
Okay, so now we have finished with the stock watches report, correct?
Correct.
Yes, I believe that was everyone that is present.
Okay, very good. So,
So now we are on to the stock study presentation.
Okay.
Carolyn, are you still with us?
I'm trying to be, yes. Sorry. Yes, I'm here.
Okay, very good. I stopped sharing.
Okay, I will share. Thank you. Are you seeing the presentation? Well,
Yes, ma'am.
the slide? Okay, thanks. And I was say good, good afternoon, everyone. And we're about to see Carolyn's staff presentation. Okay. So I will go to the basics. So we have some guidelines that we need when we actually trying to select a stock, and we're looking for quality companies that is very consistent with growth in sales and earnings. And with that, we know that the sales and the EPS growing at a steady and constant rate. It must be stable and increasing profit margin and ROE, and for those that will be return of equity and manageable level of debt, that it must be at least less than 33% of the capitalization. And the start, let me move myself out of the way. Okay. Here. The stock we're going to, that I found as being quality stock is Federal Signal Corporation, and it's in Illinois. It's founded in 1901. It has 4,700 employees. I need to move this around. Where's the best place to put this? Okay, in the bottom. Perfect. Sorry. And the ticker is FSS, and the Morningstar and value line rated as in financial strength as A. The industry is pollution and treatment control. The sector is industrial. This company size is medium, is safety, and then a timely, why keep on moving like that? Sorry. And timely is number 1. Then we always want to know, what does the company do to make money? So with Federal Signal Profile, they have two main group sector in their organization. One is the Environmental Solution Group and the Safety and Security System Group. The environmental group, that's the one that deals with the street sweeper, the sewer cleaner, those type of even the water blasting equipment. And the safety security system deals with the communication of alert, emergency vehicles, and first responders. After you have found a quality growth company, we are now ready to determine the fair price to pay for a stock. And using the SSG, we know that you have to use the historical performance for each company or the company that is selected. And we have to prepare and make a reasonable forward-looking estimate of the company. That's the future sales and the earning growth. So with that in mind, I move to the next. And when we estimating the future growth related to sales, we always have some questions that we need to answer in order to help us make that decision of what we think that will be the it's never a right percent when you're doing a forecast, but it's an easier way to feel more comfortable when you're making that decision. Because the question is, what does the company do to make money? And as in this, we know that with the trucks and the vehicles, the services that they provide. The question, what factor contribute to the growth in the sales of the past? And how will the company grow in the future? Well, Federal Signature in the first quarter, they acquired the asset and the operation of Hug Technologies, and that is a leading manufacturer of trucks mounted the road marking and the line removal. And the main customer in this sector here is the airport. And we can know that it will, the customer is satisfied because in addition to that here, they said, are there any problems in the company or industry? Well, now we have to look at, now we are faced with the tariff, and we also have to look at our competitors in a case like this. So when we're doing forecasting, this is here it said that the projected growth rate and sales and earning. So what I did, I just take a snapshot of the area on the value line that you will look and get the information that you're actually looking for. So it will be the annual rate. You have the past 10 years, past 5 years, and then it have the 2 years estimate. But forecasting sales and earning, one, what are the, we have to look at the analysts, what the analysts are saying about the future sales and EPS growth, and who are our competitors and how do we stack up. So in this presentation, we work, sorry, okay, sorry about that. So what I will do, I will change because the analysts, we can get information from Morningstar, Value Line, Yahoo Finance, and sometimes even the your broker account that you have. There's a section where you can get free services, and you could actually maybe even get the Morningstar or the Value Line on those brokerage. So I will switch out and go, give me 1 second, because now I will go live to the SSG. Give me 1 second. Okay, so here we are. Remember when I spoke about being the sales and the EPS in the same, going in the same direction, at least it's close. You can see that in, it's not
We
sharing?
Can't see your screen. We can't see
Okay,
your screen.
hold on 1 moment. Let me make sure that is taken care of. Let me get.
It's so wonderful everybody's paying attention, Carolyn.
Yes, yes, I can see that. Hold on 1 moment now. Let me see if I can go back. I have too much things on my list, and then go back here. 1 second. Let me try again. Okay, I think we should get it. Let me see. Yes, we have it now.
Yes.
Okay, thank you so much. So now we're looking at the SSG, and as mentioned, part of the basic that we need to look at, and you see that the sales and the EPS is going in the same direction. I know it had a dip in in the 60s. So I'm actually looking from 2021 going forward because it's part of COVID. So they're now coming out of that. And here we can see. So I use on the value line, the estimate was 9%. So I used 9%. Morningstar had the revenue increase by 7.8%. When I went to the sentiment, it shows like 8.8%. So I said, well, I will go with the 9%. The EPS, I went with 14 because Value Line have 13.5. Morningstar had 18.3. So you always try to be reasonable when you're making decisions of what percentage you should use on. Okay, and as you can see, if you can see it, because it seems like the bar here is kind of blocking. When you look at the evaluation of management, they're doing an excellent job because in 2024, you can see that the percentage debt to capital was only 17.5. So we're doing an excellent job. So I will move here and go into the value. Right. So here, the 5 years earning per ratio, we see here is a 27.6. So that's why it's used here in the high price to calculate the high price. And the low is 17.8. So I did not change. I used the same thing. And with that in mind, we saw that it's in the zoning, it shows that is a whole because the current price is 97.11. Well, Sharon, when I started looking at this, it was 93. And every day I looked at it and work on it, the price continued going up. So it's a good thing. However, I remember listening to a video and it says, even though you have a quality stock, it may be a quality stock, but because of the price, it's like, what are you willing to pay? How much are you willing to pay for the a stock? Know that you're looking for something that is growing. So in this case, it's on hold. We can put it on the watch list for if the price ever go down. I personally have it in my portfolio, but at the time when I saw it is when President Biden was talking about infrastructure, and that came up somewhere. It came up on my computer or whatever, and I decided to buy it. And at that time, it was only $35 at that time. So sometimes we have to pay attention to the news and what's going on. And in that way, you can start searching for quality stocks that will be growing and you'll be benefiting from it. So we look at the upside down ratio, and we see it's 2.3 to 1. So again, if it's 3 to 1, yes, then it should be in the buy, but it's not. I mean, if you click here, it also shows that, yeah, the current price, where the current price is right now. Now we look down here in the 5 years, and we look at the compound annual return. And it shows that the annual rate of return is 14.7%. And then when we look at the compound annual return forecast for the PE is 10.5. But I also wanted to go back to show the competitors, their competitors. So I just wanted to show here. And when we look, is everyone seeing the screen with the competitors?
Yes,
And
ma'am.
you see that the federal signature, it stands out compared to the other their competitors. The other the two in the bottom, it might be high, but this just seems like a just generic companies or peers. So I was just more focusing on the top three, comparing to the other two that is here. And with that in mind, that's my presentation for the Federal Signature Corp, ticker FSS. And do we have any questions?
Are you able to show the quarter over quarter? I just wanted to see what that has been maybe for the last quarterly data.
Oh,
Yeah,
sorry.
that one.
Sure.
Okay. So it has been coming down. Is that coming down?
Yeah, it's been doing a slight slope
So, yeah. Mhm.
down. But the overall projection, I believe, when you showed it for the next 5 years, is anticipated to go
Absolutely,
up.
because in Morningstar, they have it as a buy. In Zap, have it as a strongly buy. I looked at different, but again, when we said thank you for your suggestions, but then we have to be reasonable and be conservative in how we use the percentage and then gauge ourselves in if we should buy or not and how much money we're willing to put out for it's like just like buying gas, how much money we want to spend on gas.
Could I see the table if you could scroll down to the bottom?
Sure,
right?
I can do that.
Okay. Oh, so there is a negative there. Okay.
Zelda, what are you thinking?
No, I just wanted to see if there was, it looks like there was only one negative, the most recent, where did it go?
The fourth quarter of
Yeah.
last year, the miss,
The one miss there, I
but
was looking
but
at, but otherwise they've been positive.
yes.
Okay.
Sharon, do we have any industrials in the portfolio?
Hold on.
Okay.
I will stop sharing.
I closed that part out. I closed that out. Hold on just a second.
Great presentation, Carolyn.
Very good.
Very good.
So,
Made it through.
Industrial is Napco, Air Lease, Photo Labs, and Primaris. All those are considered industrials.
Oh, wow. Proto Labs. I forgot about that. All right. Thank you. Okay.
Okay. That was excellent. Thank you so much. And this is the thing that we also learned. I'm sorry. I'm going back to a comment you said. Jinko Solar is considered technology.
Yes.
Okay. Okay. And what I wanted to say is that not everything that we look at is going to be a buy. We've done this a lot of times. Things look good on the surface, and when you do the deep dive, it is a hold or it is but you did an excellent job. Thank you. That was a good learning experience. Okay. Now, but your recommendation was to put this on the watch list, correct?
Yes.
Okay, very good. All right. So that is a recommendation. Do we have to make a motion on that? Or can we just go ahead and put it on the watch list?
Just put it on the watch list.
Okay, very good. All right. So the next part of the agenda, if you can put that up, I see is guest acknowledgement, question and answer. We have basically completed our agenda as we voted on before, and we do have guests, and we are at the question and answer period part of our agenda now. Guest or Nicole? I think you were going to lead us through the question and answer part.
Oh, yeah, I don't see any questions in the chat. Are there any questions from guests? If not, we can definitely share a little about one. We want to definitely thank you for attending our investment club. We are here the first Thursday of every month, going through different stocks and enhancing our understanding of analyzing those stocks according to the better investment principles, which is consistent growth and good value stocks. And so we invite you to come and learn along with us, share your knowledge, and we can build a legacy of growth with our investments together. In the chat, I have added a link. I'm not sure if everyone's able to see it. If you came in a little late, I'll add it again. But I have added a link, which is an interest form that we've developed to engage with individuals who might be interested in joining our investment club. Right now, our enrollment is open for this year, 2025. I can go over some of those requirements for becoming a member of the investment club.
That would be nice.
If someone, okay, great. Let me pull that up and then we can go through it. So, let's see. Oh, wow, I'm on the wrong one. Hold on, guys. Now I'm in the wrong app.
Could you also just give a history of your club, when you were started? What are your objectives, I guess, or how did you all come together?
Absolutely. Well, this investment club is a part of the National Association of Black Women in Construction, which I believe was started in 91. Let me know if I'm not correct on that, Ann, but I believe the national organization primary focus was to offer opportunities for Black women, businesses, primarily employers, to work together and build relationships to help grow our business as entrepreneurs. I believe there were no real space for us in some of the larger, more well-known construction associations. And so we felt that having a space for employers rather than employees would be good for building the growth of our businesses. And out of that national association, there became a need for us as business owners to start thinking about generational wealth. And this investment club was formed under our education committee. That was in 2014. Is that right? Does that seem right? It's been about 7 years.
So 7 years ago.
Oh, 7 years ago then, so it's not quite 14. About 7 years ago, a group of Nabwic members and other members decided that we wanted to really utilize the National Association of Black Women's platform to build this club. And so our goals closely align with better investing. We focus on investing a set amount of money regularly in order to build, given at least that are generating at least 12%, I believe, in growth yearly. And we also believe in diversification. You've heard a little bit about some of the sectors that we're interested in. And so those are some of our core values as part of the National Association Investment Club. Did I freeze up? I feel like I froze up. Can you
Yes.
guys? Oh, okay. It looked like I'm froze. Yep. Okay, I'm gonna turn my camera off. Did that answer your question, Zelda?
Yes, thank you. Yeah, I'm part of an investment club. I live in Wisconsin, but I'm the
Okay.
president and I'm going to now become the treasurer. So I wanted to just
Ooh.
visit other clubs and kind of see how they ran their meetings. And I like you guys have a portfolio manager. That's something interesting that we do not have.
Mhm.
And you all have an accountant, it looks like, because
Yes.
we don't have that. So how does that work? Or have you always had an accountant?
I think over the last 3 years, is 3 or 4 years, Carolyn, they're primarily responsible for performing the K1 distribution and just organizing the club. Carolyn, do you have any other insights regarding the duties of the accountant?
No, that's exactly what it does. Make sure
Okay.
do our taxes
Yeah.
every year.
Yeah.
Yes.
Mhm.
Yeah. Because right
Yeah.
now the treasurer does that, and I wonder if it's a little too much for them.
Mm.
Well, one of the things that you may want to look at is that there is a way through iClub for you to be able to do your K1s. So your accountant may look to iClub and start working on that. But naturally, having an accountant to do the K1s is a great convenience. But BI and iClub does have that option for you.
Mhm.
Okay.
And we've been able to, because of our dues, and we've also set aside an assessment to account for those additional expenses. And that's not only for our accounting, but also for our continued learning and our club activities as well. So,
Okay. Well, it's
yep.
good to know.
Yeah,
Thank you.
absolutely. Thank you. And thanks for your questions. It looks like my screen is frozen. I don't know if it's looking that way on your side. I see Jacinta moving, but I don't see anyone else moving, and my face is frozen.
But
So,
we hear you perfectly.
yeah, I know, right? There goes Zoom. And this little circle thing is just spinning and spinning and spinning, but I'm glad you guys can still hear me. It looks like I'm not going to be able to share until this thing stops spinning, and I don't want to close it out. But I have included the interest form. What we're primarily looking for individuals interested in joining our club is for them to attend a minimum of I believe it's 8 meetings, and that includes our general meeting, which is the first Thursday of every month, and or our education meeting, which is the second Tuesday of every month at 7 a.m., in order to understand how we work, what is our flow. And that gets you acclimated to the order of our meetings and the activities that we're doing. In addition to that, you are expected to be a better investing member because a lot of the software that we use is, proprietary to better investing, and we do follow their guidelines very closely. That interest form provides a link to a 90-day trial, free trial for the analysis software that's offered through Better Investing. So you have an opportunity to try it out without any cost to you. If you do decide to purchase, I believe it's somewhere around 60 to 80 bucks a year. So even if you're wanting to look at your own portfolio and do some analysis, you can do that. There are, of course, some resources that we encourage all of our members to take.
Oh, we just lost her.
Can I just ask a question too? So now, do you all have a meeting tomorrow? Is there a Friday meeting also?
Oh, no, I think that there was an issue that, and Doritha might be able to address this, but when we initiated Eventbrite, apparently there was a small mix-up, and so no.
Okay.
Our next meeting, Nicole has already mentioned that we have another meeting. It's our educational meeting that is going to be on next Tuesday. So our next monthly meeting is going to be the first Thursday of July. Okay.
Okay.
Sorry, I don't know where I got cut off at, but I knew it was coming. So again, I can share this interest form with you guys. We talked a little bit about the membership in BI, participating in the meetings. We want all of our members to serve in some type of leadership capacity. We're such a small group, and so everyone's participation really does help our group become more well seasoned about the different roles and responsibilities that each of us take. We, of course, have a partnership agreement as well as an operating agreement that you would be required to sign if you were to submit membership. These are the two books that that I may have mentioned, Take Stock and Ellis from Ellis Traub, and then In Search of the Green. Our monthly dues are $25 plus the cent multiplier, in addition to a yearly assessment, which of course covers the expenses that I previously discussed. There is a formal application that becomes available once you meet the participation requirements of attending those that set number of meetings. Oh, I'm sorry, it's moving. And then we also encourage you to attend other better investing events, model clubs, and other trainings, webinars. The Better Investing National Conference is this weekend, or at least it's starting. So that's also a great place to go and learn more about investing in stocks. And so all of those are highly supported in this club and encouraged. Are there any questions about anything that I may have mentioned? Okay, looks like my screen is playing. I don't know what it's doing, but any questions?
Yes, hi, this is Theodora from Los Angeles.
Yes.
Very excited to be here. Thank you, Miss Ann, for reminding me. But more important, equally important, I'm super grateful that this meeting is happening at an hour that I can literally participate. The other day, I attended the 7 a.m. meeting, and for me, it was like 4 o'clock in the morning. I was falling asleep throughout the entire time. So, so my question is literally based around that. Nicole, you just mentioned that, there's a certain number of meetings that everybody's, it's a minimum number of the meetings that are required.
Right.
Now, these 4 a.m. meetings are going to be a super challenge
Yeah.
for
Yeah.
me.
Well,
So,
that
how
that's
do
a
I get
great
around
point.
that? How do I
I
get away from
know that is such a great point, and I don't know if we really thought that through in terms of the reach of interest for individuals like yourself. Um, I know that we'll probably have that discussion as an executive leadership to try and deal with that, because we really want to limit the barriers for people who have a serious interest in joining us. And so any thoughts, Sharon, as our president?
Actually, and also I was going to add that it was exciting to see there were like 3 people from the West Coast on the last meeting. I remember there was 2 people from the Southern California area, and then I remember there was one woman from the San Francisco area who was also on the call. So all 3 of us made it to the 4 a.m.,
Oh my
call.
goodness.
So,
Wow.
yeah, we did.
Okay.
Hey,
Yeah, we'll have to,
Nabwic.
yeah.
Well, I mean, the thing is this, how many meetings are required? And we have to do that by the end of the year. So it's not like there are that many educational meetings that have to be attended. Most of the meetings, your requirement is going to be on these calls. And we can think about, if there's any way that we can adjust our education meeting to take that into consideration. But I think what's really important is that these meetings are going to be the primary ones. And the educational meetings are really important for the education. But one of the things that we are trying to do in these meetings is try to make sure that, just like Carolyn did today, her presentation was not just a presentation, it was an education. And so these meetings are going to be educational. So your primary goal is to attend these meetings. And how many additional meetings we'll have to, is only be a small number for the education. And we'll have to talk about it in the education meeting, because they're good, for us and for all of us to have that upper level, that next level of information that is usually provided in those. So we'll talk about that, but just realize most of your requirement is going to come from attending these meetings.
I can make these afternoon meetings, guaranteed.
Awesome.
Okay. I do see Mia has had her hand up for a while now.
Yes. Mia, how can we help? You have a question?
My question was answered. I'm sorry.
Oh, okay.
I forgot to lower my hand. It was answered in the middle of me waiting.
Okay.
So good to
All
go.
right.
I think Sharon
Awesome.
answered that.
All right. Thank you. Thank you so much.
Thank you.
Valencia.
So as we become more involved in the club and get accepted as a new member, will we have the watch list? Will it be split up, or will it stay consistent? Okay, I just want to know, because I wanted to share in some of the watch list.
Yes, we are always looking for stocks to watch. I think because the size of the clubs right now, we're not trying to overload our members, because you see the kind of information that we're expected to provide, so that we can stay current on whether or not it's a good opportunity to purchase. But we're always looking to add stocks to the watch list and to continue to monitor those until and even well after we've purchased them. So yes, that does continue to get split up between all of the members.
Thank you.
Yes. Any other questions? Yes, Jacinta.
I just wanted to say thank you. I've enjoyed being a part of this meeting.
Yay!
And I'm looking forward to seeing what else you have to offer. Thank you.
You're welcome. Yeah. I think the first step is to complete the interest form. That really kind of gets us. I'm sorry, is it me with the echo? I feel like I got an echo.
There's an echo.
Oh,
Mhm.
it is. Oh, I'm not sure how to do that. Okay. So yes, complete that interest form. It starts the process with us understanding who you are, at what level of understanding you have in terms of investing, because like Sharon mentioned, our education Training is so fluid. We go anywhere from just sharing really good articles to watching really good webinars and trainings. And we also do SSG presentations there. And so we want to make sure that we have a basic understanding as to who our potential membership is so that we can tailor that training or create the opportunities for members to feel like they can really contribute and be engaged. So that form, I'm gonna add it one more time into the chat.
I have it up on my computer now.
Okay, perfect. Yes, that's really the first stepping stone to really kind of getting involved. And from there, we start adding you to our email list. And I believe one of the things that we're going to be doing this week is, as a group, is attending the Better Investing National Conference, which is also a great place to get started. In addition to that 90-day Better Investing membership, there are so many webinars, so many YouTube videos, so many great presenters that you can just kind of take advantage of that are for free. So we encourage that as well.
My apologies. One more question.
Yes.
Do you have a link to the national I forgot to register. I know I was supposed to do it earlier this month, well, last week, but it's just gotten to the month. So yeah. Do you have a
Oh,
link?
you talking about for Bink?
Yes, for the national Better Investing National.
Yeah.
Conference.
Dorita, do you have that one? Let me see if I could find it. We were just talking about it the other day.
It's on the website, Valencia.
Yeah.
On the
website.
Okay. Okay.
Yeah, it's on, and it's this Saturday and next Saturday, okay?
Okay.
All right.
It looks like everybody in your club does the SSG, so everybody has access to the SSG and the plus, SSG plus.
Yes.
Okay, so you all, that's part of your membership, or you pay for it in your membership.
Correct.
Okay.
Yes. And that is part of the assessment. Yeah. Your membership. The club pays for our SSG. No, the club pays for our membership with Better Investing. And we pay for our SSG plus. I think most members have SSG plus.
Okay, so it's an expectation that all members have the SSG plus and will at some point do their own SSGs.
Correct.
Okay.
I did drop a link in the chat.
Okay, great. Any other questions, comments? Not sure why I'm getting an echo.
I don't know. Dorita was echoing also.
Okay. Well, I believe that concludes all of the information that we wanted to share, Sharon. So the floor is yours.
The only thing that we had on the agenda, kind of talked about this already, was the Better Investing. And I think that Teresa has already put the link.
One moment, Sharon. Can everybody please? Okay, let's try that again. I think it's cleared up. Great. Go ahead, Sharon.
All right. I think that the last thing on the agenda, actually the last thing was an update on Katina, but I think during Carolyn's treasurer's report, she kind of gave us the update. But and Nicole has told us that the Bink, they're having it virtual, and it is this weekend, this Saturday, and next Saturday. And if you are already a member, even if you're not a member, you can join. You can purchase your attendance into the Bink National Conference. So that is awesome for all of us to be able to go to that. Now, what is important is that in the event that you cannot attend all of the meetings, and we all have lives, we all have things to do, you will be able to watch the videos until the end of the year. They're going to be made available. The other thing that we will be doing is that we are going to, as a group, this is what I believe that we've discussed, ladies. As a group, some of those meetings we'll be watching either a whole or part of to the end of the year. Okay. So we will be watching them just in case if you missed something, we will be watching them. I just want you to know that attending the national conference, the BI national conference, is really an educational experience. And if you can do it, definitely do it. And for those classes that you miss, we will be watching them either together, maybe during during one of these meetings, or unfortunately for Zelda, one of our at 4 o'clock in the morning during one of our education meetings. But we will make sure that during the course of the year, we will make sure that we use the information that is provided. All right. That concludes all the items on the agenda. We are running very long tonight. So if there are no other questions, I think that we had a very good question and answer period. We will do this periodically until everyone, until everyone is feeling comfortable. So with that concluding, yeah, is there okay. Anyway, so this is it. I will, if there are no other questions, unless there are other questions, we can entertain a motion to adjourn this meeting.
And McNeil, motion to adjourn.
I second the motion.
So is there any questions and discussions about why we should not adjourn this meeting? If so, we must just have that discussion. Otherwise, we'll vote for adjournment.
I motion to adjourn, Sharon, the second time.
Okay, good.
Before I fall asleep.
I know, I saw it happen. Okay, thank you, ladies.
All right, good night.
Everybody is going to be coming Tuesday.
Tuesday.
Bye-bye.
And I'm open to, I'm open to move that, because if most people are traveling anyway that time of morning, so, yeah. All right, thank you.
Okay.
Okay.
Thanks, everyone.
Okay, bye-bye.